The stock market's at an all-time high. Bitcoin is only a few $1,000s away from its all-time high. You're fighting the FOMO, or fear of missing out. So you're wondering, should I be buying right now even though we're at all-time highs? Is this the beginning of a massive bull run, or is this the peak? Stick around as we break down 5 key factors to guide your decision. This is a crucial time in the market, so you're not going to want to miss this one. Make sure to hit that subscribe button and let's dive in. Hello friends, welcome back to Decentralized Masters, where we empower you to build a digital asset portfolio that thrives in any market. I'm the DeFi doctor, and right now, Bitcoin prices are on fire and are close to hitting all-time records. And FOMO is real. But with great highs comes the big question. Is it safe to jump in right now, or are you risking a crash? First, let's talk about market cycles. Markets move in waves, bull runs, corrections, and bear markets. Right now, we're in a bull phase, with the S&P 500 and NASDAQ at an all-time high. But does this mean it's too late? Well, not necessarily. Historical data shows bull markets can last months, even after a new all-time high. For example, in 2021, Bitcoin hit $60,000 in April, then climbed up to $69,000 by November, before correcting. Similarly, the S&P 500 rallied 20% from mid-2020 to late 2021, even after multiple peaks driven by strong economic recovery signals. The key is momentum. When institutional adoption like spot ETFs or regulatory clarity drives prices and runs can be extended. However, highs also signal volatility. At Decentralized Masters, we teach our members how to watch on-chain metrics like exchange inflows to spot potential sell-offs. If you're investing now, focus on projects with strong fundamentals. And if you can't stomach volatility, avoid meme coins or hype-driven projects with no real utility, as they're the first ones to crash when volatility hits. Next, let's talk about risk. All-time highs can feel like the gold rush, but chasing FOMO without a plan is a recipe for disaster. At Decentralized Masters, we stress disciplined risk management and an exit plan. Start with position sizing. Never invest more than you can afford to lose. Diversify across assets to spread the risk. Don't go all in for one coin. Also, set clear exit strategies. For example, a common strategy is if a coin hits 2x from your entry, consider taking 50% profits to lock in gains. At Decentralized Masters, we will show you several different strategies to take profits on your investments to make sure that you're always taking profits and not riding a token all the way up just to have it crash to where you bought it or lower a few weeks later. Should you wait for a dip? Well, timing the market is tempting but tricky. Data shows consistent investing, dollar cost averaging often outperforms waiting for the perfect entry. For instance, investing $100 monthly in Bitcoin from 2017 until 2021 yielded better returns than waiting for a crash. DCA lets you buy at various price points, smoothing out volatility. DCA also works well for other asset classes, such as the S&P 500 and NASDAQ as well. Now, with that said, all-time highs can precede corrections. On-chain analytics like funding rates or whale activity can hint at overbought markets. At Decentralized Masters, our global team monitors these trends 24/7, ensuring we attempt to catch these shifts early. For example, if whale wallets start moving large amounts into exchanges, it's a red flag for a potential sell-off. Use tools like TradingView to identify support zones for Bitcoin and check the 20-day moving average for historical support. Alternatively, start with a small DCA plan, say $50 on a weekly basis, to ease into the position without stress. This hybrid approach balances timing and consistency. The truth, time in the market often trumps timing the market. Start small, build steadily, and you'll capture gains over time. Curious about real-time market insights? Join our free community. Link is in the description to see how to spot these opportunities. Here's how to build a practical strategy you can use at all-time highs. This is an example of how to build a balanced digital asset portfolio. This isn't the portfolio we show to all our members, as building a portfolio is very specific to the goals, risk tolerance, and financial situation. But this general framework is a great starting point for navigating high markets. Put 50% of your portfolio in Bitcoin and Ethereum for growth and stability. 30% into mid-cap altcoins like SWI or Chainlink for growth. 20% in high-risk, high-reward projects. Profit-taking plan. If a coin doubles, sell half to secure gains and let the rest ride. Rebalance quarterly. Markets shift, so adjust allocations every 3 months. This strategy balances risk and reward, but this is just a very simple example for just holding tokens. For our members, their portfolios will contain other sources of income, like staking and yield farming, that help you earn in all markets, whether bullish or bearish. Finally, let's talk psychology. All-time highs spark FOMO, but they also trigger fear of a crash. The key is staying rational. At Decentralized Masters, we see people making costly mistakes, panic buying at peaks and selling at dips. To stay grounded, rely on data, not emotions. Tools like Glassnode or CryptoQuant track market sentiment, which can give you ideas of when the market might be overly greedy, where it might be a good idea to take some profit, or when it's overly fearful, where it might be a good idea to buy the dip. If you're nervous about highs, start small with dollar cost averaging to ease in. Test strategies in our free group where we can share daily insights to keep you focused. Our mentors with years in financial and digital asset markets emphasize discipline over hype. High markets reward those who stick to a plan. So what's your biggest fear about investing now? Drop it in the comments and we'll address it. Staying calm lets you turn market highs into opportunities, whether it's getting in to ride the wave or a short to ride the market down. All-time highs are thrilling but tricky. By understanding market cycles, managing risk, balancing timing with consistency, building a smart portfolio, and mastering psychology, you can navigate this market with confidence. At Decentralized Masters, we're here to guide you with data-driven strategies and hands-on mentorship. Worried about jumping in? You're not alone. Thousands trust our education to make informed moves. Ready to take control? Visit decentralizedmasters.com to join our free community. Make sure to subscribe, hit that bell, and comment whether you're investing now or waiting for a dip. With our expertise, we're ready to help you thrive in this decentralized world. Stay sharp, my friends, stay decentralized, and we'll see you in the next one.